Good morning, everybody. Welcome back to Schwab Coaching. It's our Tuesday edition of Trader Talk in today's market. I am your host, Kevin Horner. I am joining you from a beautiful Denver, Colorado, on the heels of a wonderful Bronco victory last night. I'm a little bit tired, but I could not be more pleased than to be here with all of you. So thanks for joining me today. Say hi to my friend Connie Hill over there in the chat function. She's going to keep an eye on things for me, certainly get to some of the questions that I'm unable to get to. In this particular class, I am here with you all solo, as we do on Tuesdays, of course. And so that means some opportunity perhaps to get to your specific questions. Please feel free to use the Q&A for that purpose here as we go forward. You can feel free to post in there for the next 45 minutes or so. If you're not already doing so, please follow Connie and me on X at Connie Hill CS, and I am at Kevin Horner CS. We try to post for you there periodically throughout the days and weeks, give you some ways to engage with us outside of these classes, of course, and would love to have your follow there as well. So thanks for doing that. And then finally, if you like today's conversation at all, please be sure to hit that thumbs up for us. As you know, we get these classes into the archives for all of you. And for other viewers who are unable to attend live, this can do a nice job of bringing us into the algorithm a little higher up the preferential ladder, so to speak. So that would help us out a lot. So before we get into things, I'm going to jump to our disclosures. I'll remind you, of course, that our conversations here are exclusively for your information and your education. Simply put, we are not in the business of making recommendations nor endorsements here. We do not endorse any particular trading strategy specifically. It's also important to remember that while we cover and discuss technical analysis, concepts of technical analysis, strategies that traders may choose to employ, we encourage you to consider technical analysis a complementary viewpoint to any fundamental research or additional information you're utilizing for your own decision making. We often suggest that we make decisions based on a multitude of factors, and that is still the case. We do not encourage you to make decisions exclusively off one point of view. Now, if you are new to our Trader Talk segment here, everybody, we start the show with a broad market review. What that means is we hit up the major indices. So we're going to look at the S&P 500. We're going to look at the NASDAQ 100 and the Russell 2000. We'll expand a little bit beyond that, hit up some industry groups as well, and then move into sectors before we get to individual stocks in the news. Had a couple that we didn't get to yesterday that were in the news but did not get charts on for you, so I thought we will look at those today as well. So put a little pin in that, save the back half or maybe the back third, our final 15 minutes or so. We will get to some specific stocks in the news with you. Now, last thing I want to mention is to make sure you're keeping an eye on the schwab.com/events page as we continue to get our live event calendar fleshed out for you in 2025. As you can see, we still have a few events remaining between now and the end of the year. But in January, we're going to be out in Dallas. A little later in January, we're going to be in San Diego. If you go to that schwab.com/events page, you'll be able to keep apprised of what we've got coming for you. And note the registration links there so that you can get registered if you're able to attend. Quick reminder, we offer two separate live versions of these opportunities for you. One of them is a market drive event. That's typically a one-day event where we offer you the broad macroeconomic conversation. You get to hear from some guest speakers. You get the overall 30,000-foot market view, if you will. Whereas a workshop is typically a two-day event. You come out, we give you power at your desk. You sit there and you watch a presentation, an educational discussion over multiple days. And we ask you to bring your devices with you, sitting with us, educate on the fly, and learn something along the way, obviously, all while accessing your Thinkorswim platform and applications of your choosing. So a really good way to get out and see us coaches and the rest of us that are out there on the Schwab Network, for example. A lot of opportunity for you here to engage with all of us. And with that, let's get to the fun stuff. The reason that you all are here today, let's move to the S&P 500. We've been talking about getting outside of the range we've created over the last couple of weeks here. And yesterday when I had Rachel on, we talked about getting through that new high in the S&P 500 here. And as you can see, everybody, we got it yesterday. New high close, traded outside of this 150 to 175 point range in here. And now maybe we have given ourselves a little bit of a new opportunity, right? pushing to new highs. As we often say, new highs are not bearish. What we are looking to do is gain some continuation here, right? Maintain the level of our breakout, hold on to that 6,000 point area approximately. And that's just that peak that we had, right? We pushed into about 6,000 here. Our highs came out at around 6,010 or so. And then we got in here and paused and then moved higher. So all of this is acting in a manner consistent with what market technicians would look for, right? You're getting consolidation moves followed by breaks to the upside, continuation move thereafter, etc. So more of the same. The only thing that I like to discuss in here as it relates to the daily chart, everybody, is to give yourself some understanding of what a real pullback might feel like. And generally speaking, as we are moving to new highs, this becomes difficult for the trader to do because we inevitably think that these new highs mean that we're going to not just hold this level but continue to push higher. We may very well do just that. What's unclear is when we will get our next opportunity around the 50-day moving average. And those ovals that I've provided here, we put on just yesterday, but you all can see that pullbacks to that 50-day moving average or below it have been your opportunities to join the trend. The challenge now is that if we looked at where we are here today at about 6,050, for example, and drew down to the 50-day moving average where we would maybe need to see a test, that is about a 3% pullback in the SPX. So that seems notable. A little more in the NASDAQ, as we'll see here in just a moment. Love hearing from you folks who are familiar out there at Oregon. Yeah, you know we got our quarterback from Oregon, via some other avenues. Obviously, he didn't play exclusively in Oregon, that is Bo Nix, but certainly finished his career there in Oregon and had a really nice senior season. Happy to have him as our quarterback. It's been a while since I've had a reason to root for a quarterback here, going on 10 seasons, if you can believe it, since I had Peyton Manning out here. But anyway, so we're talking about a 3% potential pullback to that 50-day moving average. We've got to keep an eye on that, and we got to do the math to know that if it is in fact on the table, that if we get that 3% pullback, how will I look at my portfolio? How will I manage that 3% pullback in SPX specific investments? So 3% pullback on the SPX might mean an even deeper pullback in your individual equity. So always be aware of that, and further be able to do the math a little bit so that you know if we pulled back X percentage, how is that going to impact your overall portfolio? What is it that would leave you feeling like if you did not take any dollars off the table? And this is a thought process, everybody, that I believe goes a long, long way towards getting us as traders to full and total comfort along the path. And what I mean by that is always being comfortable with the amount of cash I've got on hand, the dollars I have devoted to the trends that I'm trading at any given moment, and the willingness to allow the market to simply do what the market's going to do, right? We recognize we're going to get some good up days. We're going to get some big down days. Typically, those down days happen a little more quickly, a little more expeditious to the downside than our grind higher tends to go. But we keep that in mind so that we continue to base our decisions off of comfort and logic as opposed to decisions in haste, which can commonly lead to mistakes. So that's what we want to work on there, everybody. All right, so good start here with the SPX as we just kind of flatten out over the 6,000 level. For you short-term traders, we're going to look at the pivot points here using that 5-minute bar as I like to do. And we're just going to see where we're fighting it out right at the pivot. Our pivot level today, 6,045, does stand to reason. I'll just, as I often do when we talk pivot points, I'll just remind you that that is the pivot itself. The purple line here is the true pivot point. The R1 above it, resistance 1, S1, support 1 below it. The purple pivot point is essentially the average price of yesterday's price action utilizing open, high, low, and close. So this way, what you're getting is really what some traders refer to as the equilibrium price. Can we learn something about today's price action by holding on to that ledge or breaking below that ledge? It can be a very short-term view for support or resistance. Right now, we're fighting it out. It's unclear. We're going to need a few more bars to make some understanding here. Might just be simply sitting on our hands as we await the JOLTs report, everybody, which will be coming here at the top of the hour. All right, so we like what we see out of the S&P 500, that uptrend, depending on really many different time frames you could be monitoring this. The uptrend in the S&P 500 is still well established. Let's see how we're doing in the NASDAQ 100, everybody. We have pushed into new highs, or pushed at least to the same new highs that we saw back here immediately following the election on the 6th, 7th, and 8th. We took that pause at this 21,200 level, essentially, and we are right back there. Now, we're starting to get some, really, we're seeing continuation of this rally, but you'll notice that the push higher here, look at how we're really diminishing the range. So we've got a wide range, wide, less wide. It just tightens up in here. And I think traders are expecting a break or pullback one way or the other. Now, there are some bearish indications here on the chart that can give traders pause. But let's talk about this with a little more clarity. And before we jump to that discussion around what we're getting out of the NASDAQ rising here, there is a survey opportunity. Would love to hear from you, everybody. I really value your feedback. So if you don't mind, click that link that you see in the chat here. It'll open a browser window for you, put you right next to this browser window, and then post-show, you can just step in there and give me 60 to 90 seconds of your thoughts and your feedback. Give me some ideas. What are things you want to see in this particular class? You know, we host Monday through Wednesday, the archived Trader Talk session here available for you. We also host the Friday live exclusive show. Would love your ideas to bring some new stuff to the table for you all. So happy to hear from you. Please do take a moment to share those with me. Okay, so what's happening in the NASDAQ? Well, we are right at similar highs. I'm going to go ahead and close out all of these lines I've already drawn in for us, and let's just kind of talk about what we are seeing. So we've been right. So back, if you remember, that August 5th open back here was when we oversold and got a nice big bounce from the market, right? And what we have seen since has been a consistent push, and it has been more like a grind. We made that high, and then we've pulled back from that high. So here we sit right at the same level, and it's been a bit of a steep slope. Whether you drew a line all the way from back here, which is totally within reason, we can do that. You could also just draw it from back here or back here, depending on your own time frame. But we're setting up what appears to be, in a short-term visual, a rising or ascending triangle, typically viewed as a continuation pattern. Certainly, the opportunity exists for us to break through this 22,000 point area, 21,200 point area on the NASDAQ 100 and extend the rally. How high could that go? Well, we have a few ways of calculating or measuring that, of course. One, we could just look at the short-term view, basically everything that's happened since the election. And a lot of traders would just talk about it from the recent peak to the most recent low. So we could just draw a line, right, from here to the trend, to the bottom of the line, take that new line that I just drew, activate it, and I'm just going to add it to the breakout level. So here, we would simply say, if we can close above 21,200, we have the opportunity to suddenly maybe be at about 22,000, another 800 points higher over the course of a similar time frame that it took to set up that pattern. So what are we talking about? Well, basically about a month in length here, right? So if we broke to the upside, and we have not done it yet, let me reiterate that, then we have the opportunity over the next month, maybe as we head towards the end of the year, we could be seeing this push from 21,200 up to maybe as much as 22,000 from that measured move calculation. And as always, it's incumbent on me here to mention, measured move targets are never guaranteed to be achieved, of course, but it is a way that a trader might calculate opportunity on the upside to give yourself a target to shoot for, right? Some traders like to utilize the measured move. Some like to utilize the measured move less a certain percentage to give them a better opportunity to be exiting, not holding too long. And then further, Some of you like the idea of setting multiple layers of targets and exiting pieces here and there. So give consideration to that as well. So haven't yet closed above 21,200, but a close above it would be fantastic for the NASDAQ 100. Now, the one other thing that we got to talk about is the bearish nature of that recent high. It is a divergent recent high here, right? Notice that when we made the high back on the 7th or 8th of November, look at where our RSI was. And then here today, we are basically at the exact same level the last 2 days in price, but not as high on the RSI. Now, some traders might take that to mean that a breakout is not imminent, and as such, might be positioning in a defensive manner right now. That could mean reducing position size, making sure that they're more comfortable with what they're holding for the potential of a rejection at this 21,200 point level. That is entirely within reason for the trader who is either worried or feeling a little nervous about the divergence. Now, the divergence, I have to remind us, this is not an implication for reversal. It just means that the recent move to the upside may not be considered as strong as prior moves to the upside. We get divergences all the time that play out opposite of the implication, though. So just keep that in mind, everybody. Is by no means an indication of an imminent reversal, but as traders, the number one thing that we must do is maintain comfort regardless of what the market throws at us. I think it's very important to establish that viewpoint and make sure that if we're wrong about this being a breakout opportunity and it in fact gets rejected here, how would you handle that? What are the steps that you will take in your individual trades or portfolio to maintain your comfort in such a scenario? That's the key we want to consider. Okay, so that's what we have in the NASDAQ here, what we're monitoring. Let's look at that 5-minute bar before we jump on over to the Russell. Here we've got a weak open below the pivot, but very quickly above it. So the fact that we've been able to recapture the pivot and hold on the open here, going forward over the next few bars, maintaining it certainly is favorable. Not necessarily great that we're fading at this 20-period exponential moving average. Some traders use that for trend directionality here. Good opportunity perhaps to keep an eye on things if we did manage to trade over that 20-period exponential moving average and hold it. Some days we can see that act as support or resistance for us depending on the manner of trend we are watching. So not exactly an explosive move off the open here. I would say fairly muted start to the day for both the S&P and the NASDAQ. Let's look on at the Russell. Equally muted, basically flat here, everybody, off 0.06%. Kind of looks like we're setting up a bit of a bull flag, though, doesn't it, everyone? I mean, we've just, after having popped into resistance, we have consolidated over the last week. We've managed to hold our gap zone right in here. And so I could put a gap zone rectangle of short-term support, an area where short-term bounces might occur. Notice the 20-day still looms beneath us. So could we break our flag bearishly? Absolutely. We don't have to break it bullishly as much as we'd love to. But that's kind of what it looks like in here, right? Pennant, flag, etc. Nice long flag pull all the way down with the test at the 20-day. My goodness, that's an 8% rally, by the way, everybody. This is quite intriguing. So ultimately, we're waiting for, many traders, I would say, waiting for a break of the flag. If you're bearish in nature, really, you're maybe looking at a couple of stairs beneath us here. This ledge in here, the zone of support in the gap, manages to provide potential support. Below that, we've got the 20-day. And so if you look at those levels and you say, I can hold on to X number of my dollars invested in the Russell as long as it holds the gap zone, some would have maybe an exit strategy below the gap if you start working your way down the candle from here. Others might say it's only going to be an exit strategy under the 20-day moving average, which could also make some sense. You know, the 20-day has been respected, though, only since the election. And so this is maybe a discussion around narrative and the belief of what can happen for us going forward as we head into 2025 with a new regime in charge. And so regardless of that viewpoint, everybody, there are always levels to keep an eye on. So we've got 20-day for potential support. Breaks of the 20-day could mean the 50 or maybe the duplicate area zone of potential support, right? Because we got this huge zone back here, which I could even take into below the 50-day moving average, because this is a massive gap. So this gap zone provides a lot of support, a fair bit of confluence, if you will, data all appearing at the same level, that being a nice uptrend line, 50-day moving average, and a zone for gaps. So you've got a lot of horizontal support in this neighborhood of around, say, 2260 to 2300. But obviously, having broken and pushed to these highs that we've only achieved once previously, we're obviously hoping we can maintain the level over 2400 and move to new highs, because on the weekly chart, I think it's well illustrated how deep a bottoming pattern we have worked our way out of here. And traders, you all know, when we get out of big areas of former resistance, it can be opportunity for potentially explosive moves to the upside if we can get closes, in this case, closes over that 2450 zone here. If we can push through there on a weekly basis, that would be helpful. Now, obviously, this is a big week. JOLTs report today, jobs numbers end of the week. All of that is going to have plenty of impact on our ability to break out or take a rejection at this level on the small cap. So plenty to keep an eye on here, everybody. All right, let's see. Thank you, James. Appreciate the comment there. Hey, again, we traders, we have to have our own approach. You can rely on others' thoughts and concepts about trade management initially as you're getting your feet wet and figuring things out a little bit. But it is imperative that at some point you start basing your decisions on your comfort zone, your tolerance for real risk, once you get to the understanding of what real risk is for you. We as traders, we are all different, right? Never assume that when you talk to that trader next door telling you how great they're doing in XYZ stock, don't assume that their time frame is consistent with your time frame, everybody. I think it's very important that we individually define our process, know our comfort zone, stick to it, stay disciplined. That's where the results can come over the long haul, is through your discipline and consistency. Here, let's move on to the semis, everybody. We talked yesterday at length about the questionable nature of the bounce back here in the semiconductors. Questionable because we've been below the 20 and the 200-day moving averages back to November 14 in here. We have managed to bounce into that zone of potential resistance in here. So we could draw a line off of our peaks and put that on there. And we could say that we are trying to decide, do we get ourselves back into the triangle here quickly? Was this just a fake out breakdown, as it were, because we have, again, pushed right into the 200-day. We would love to keep moving, but I'd say we're a little dubious about our opportunity. Now, as usual, this all depends on your thought process, but from a technical standpoint, the fact that we are fighting it out at the 200-day moving average right now is significant for us, I'd say. We've managed to come off of this low quite nicely, 47.67. We've pushed up all the way to 5,040, but I do not get enthusiastic too much, because we still see a series of lower highs in our RSI. And inevitably, I got to talk about the RSI from a standpoint of trend. And if we are looking at a potential breakdown, well, a rally like we got here, so, just look at where we are off of this low, which came down to about 37. Remember what our RSI detail speaks to. It's a banded view, right? So overbought conditions over 70 and oversold conditions under 30. Now, if we were in a channeled approach, sideways with matching highs and matching lows, we could speak about the idea that we would not be considered overbought until we reached into that 70 line. But if this is a breakdown in a longer run trend, well, then the bounce that we've seen off of this low here, low in price, low here, the bounce we got has only taken us up to the 50 ledge. And commonly, we see that when you rally in the midst of a downtrend, you can be considered to be overbought between the level of 50 and 55. And that can be a spot where the trend in the short run loses its steam. So if we were, for example, seeing the RSI already having crested the last peak, well, then some traders would feel a little bit more confident in our ability for price action to put us right back into the triangle. However, because we have not only are we not making a higher high in the RSI, we're actually making a lower peak as we continue price action lower and running ourselves into that 50 level. That can be a rejection zone. So it's very, very important that we see the SOX get above the 200 and hold for a period. And this, of course, becomes an opportunity for you traders who've been here frequently to talk about the potential of the so-called Horner rule coming into play. See if we can close above the 200-day moving average for maybe 2 to 3 consecutive sessions, which could give us the belief that we are back in trend. Yesterday's close came in at 5,055 on the SOX here, and the 200-day moving average was 5,000 and 5,040. So we closed above it yesterday is what I was pointing out. And if we can close above it today, that could give you day 2. Would love to get a day 3, right? Yeah, you're right, Carol. The 20-day is fish hooking a little bit. Maybe that's going to give us some indications, but we're going to basically need to look at this on a little bit longer run because the pattern we're talking about is significant, right? I mean, this development of a triangle goes back to early July, and we didn't fall out of it until, really 4 months later here, right? So you're looking at a 4-month continuation pattern, and that continuation was broken by virtue of the last 2 to 3 weeks here. So let's see how we act at the 200. Can we at least get back up above the 200 on a series of closes? That would be nice to witness. A little too early to know. Okay, another area that has been pushing hard, the transports, kind of acting a lot like the Russell, everybody. I noted that I pulled this up late yesterday on my own and saw a similar look to the Russell as we've got here in the transports. Notice the break to new highs through this ledge at about 16,700. If I pull this into a weekly, you'll see this even more clearly, everybody. So I'm going to zoom in here. We've got a few different levels. This ledge here was important for us. And then now we have managed to push into the measured move calculation, everybody. So we just took the range that we traded in the transports from about November of last year. Yeah, it was November of last year. We didn't bust this range until mid-October here, right ahead of our election. And all this is just the range height from the lows to the high added to the breakout spot. And look at where we took that pause, everybody, right there at that same achieved measured move target. So always fun when things play out the way you might expect. We are already, now this is notable on the weekly, everyone. I'm going to zoom in again. Today, this week's candle does stand out for us, right? We made a new high last week, but now we are already trading through the low of that high week, and we have filled the gap and are trading through the gap. So maybe we are in pullback mode at the moment from the longer run weekly here. So that certainly stands out. If we pulled this back into the daily, it's just the 20-day. So as usual, always about your time frame, everybody. What is the time frame you're watching the market? What is the time frame that matters to you? If you are, in fact, a shorter term trader, this might be a spot to keep an eye on. Now, that doesn't mean a trader is going to be all enthusiastic and stepping in immediately, because commonly a trader wants to see, do we hold our support? Do we open tomorrow at a level above the 20-day moving average and start trading through the high of this day, this being of the low day in any pullback to this point. So in order to feel like we've got a simply put a test of support at the 20-day, traders may want to see us trade above the today high tomorrow, right? And so if you trade above that 17,515 zone tomorrow, then you could be looking at the continuation of the trend that's been working. It is kind of nice that the 20-day back here, everybody, has been working pretty well. We've really held the 20 for the majority of this back to mid-October, right around the 10th here. When we captured it, broke out, came back and tested it for 3 days. Notice the 3 days here on the 20, but really fighting it out there, right? We had a lot of tails below the 20-day, ultimately closing in the neighborhood of the 20 and then finally moving through it. So real nice move, though, in the transports here of late. And, of course, the break in the transports occurring with the follow-through on the election. All right, yeah, JOLTs report has come in, everybody. It looks like the market has responded, but not in a way that necessarily we'd have expected. It hasn't exploded one way or the other. Let's jump back to the S&P, and let's just quickly peek in on those 5-minute bars. And at the 8 o'clock hour here, we basically got ourselves right back to the pivot. So we know where we need to go, right? We got to get above 6,045 today, start trading above that ledge for a short-term opportunity. And I do mean short-term. We could see that be opportunity for the remainder of the day, but we are right at the pivot, kind of fighting it out right now. NASDAQ has turned green, and we are above the 20-period EMA, exponential moving average, pushing through, about to push through potentially those highs at 21,180 that we made just yesterday, and then potentially targeting the 21,200 level from Friday. We could be looking at new short-term highs in the NASDAQ 100 here as well. So ultimately, yeah, the market more or less taking the JOLTs report and saying, okay, great, we didn't get negative news. And obviously, we're going to continue to push forward towards the end of the week. We get some more clarity on the jobs report. So not a negative sits here. Let's see that Russell real quickly. And so at that 8 o'clock hour, we got a little bounce here. Let's see if this can push higher, get you back through the pivot, but a little early thus far on that. All right, so I told you all we would get to some stocks in the news today, some stocks that we did not necessarily get to yesterday, but I wanted to make sure that we brought to the table. Let's pull up Supermicro Computer. We know that they had some positive results, not positive results, but at least some changes to the narrative yesterday in regard to their independent review over their balance sheet, and there was some concern, obviously. Well, the stock has managed to put itself in a bit of a better position here of late. The notable move really was getting yesterday's candle through this zone here. I'm going to change this line to be green in reflection of its now potential support in lieu of resistance. So I'll just snap that. Notice where it is, everybody. It's right above the 50-day moving average. Yesterday's candle really giving lift here. When you cleared the high here, which was at the 50-day yesterday, thing really took off. The momentum was there, and you can see it's also a big candle day in volume, everybody. And I'll just remind us, you know what? It's not you and I who can make big adjustments in the volume like this. This is institutional investors. There's just no way when you have a stock that's trading at 200 and let's see the average volume here. You can't get yesterday's volume at 260 million. Does not come from us. That's just ultimately what I'm getting at, right? We small dollar traders, retail traders, we just don't have that impact. So it is deep pocket investors. It is hedge funds. It are and large pension accounts, mutual funds, etc. All of that plays into the volume spike you got here yesterday, and it seems like yesterday was a little bit of a relief valve explosion, if you will. So you're getting continuation there today. Many traders are going to target that next spot a little bit higher, and that is the last resistance spot, right? So maybe in the neighborhood of $50. And if you can work your way through 50, then you might be looking at the next ledge, which is up there around 64. Now, percentage-wise, all of this looks like neat opportunity, but every opportunity can be reversed rather quickly. And so inevitably, as traders, set your plan, know what your expectations are, put yourself in proper positions, and then know your downside targets, manage your risk. No other way to go about it, everybody. Big, important potential move here. But the fact is, recapturing the 50-day moving average with conviction here today, day 2 above the 50-day with some conviction, is significant. You know, SMCI has not seen action like that for a while. It hasn't been above the 50 with any real window of time and since the summer. And then the thing that stands out from the summer action is that while it was above the 50-day, it was incapable of making new highs, right? So all of these tails kind of tell the story that as we got up into that zone around 95, we just kept getting beaten back. So there was a lot of supply there even still. And the difference now is it's a little bit reversed, right? A lot of potential opportunity, but the narrative has now shifted. And so now you're hearing from many traders suggesting that this is potentially undervalued if all of the audit concerns come out in the wash as no big deal, so to speak. And again, I'm not suggesting that's what's happening here, but yesterday's report certainly lends credence to the idea that there could be upside in the short run. But again, that's all about potential for trade opportunity, not necessarily something of a longer term variety. So always be aware of where it is your targets are and what you might be striving for. All right, we also heard yesterday from Intel, who, depending on who you choose to listen to, some would say we had a CEO resignation or retirement. Others might choose to suggest that the CEO may have been kind of nudged out the door, perhaps. That's always a possibility. But the stock's price reaction here has not been fantastic, unfortunately. You are seeing it fall through the 50-day moving average today. The line of the white line I've got on here was actually a long run area of former support. And as you can see, everybody, my goodness, this doesn't look good, does it? I mean, if we, let me I'm going to pull some detail off the chart here so I can at least, let's eliminate those corporate actions. And we could see this chart pattern a little more clearly. So that line was a long zone of support for Intel. This goes back to 2022, and we thought we were going to be good, but my goodness, what an ugly, ugly candle here. And that breakdown has resulted in a bit of a rally, right? As we often hear, we get these big drops, and then we get those rallies. Talked about it with the semis already. This move here in a certain time frame can be considered a bit of a bear flag, can it? I mean, that's what it looks like to many traders, I would say, is a bear flag move with maybe having met resistance at former support, now potential resistance. I'm going to recolor that line. And there you are, rejected at that ledge, got to it twice, 2 weeks in a row, but rejected. Now we've made lower lows along the way. Now, if we break this, now the green line here, everybody, that's our 20-week simple moving average here. If we break down here through the uptrend, boy, this could get decidedly ugly on Intel. Now, I'm not calling that play. That's certainly not what I'm suggesting. It is in the channel still, but I thought it was notable given the nature of the pattern and the location of the rally back here, everybody. The resistance, once again, just playing in a manner that was, I mean, no other way to put it, kind of expected given the move we made, right? Significant breakdown through major, well-maintained support here. Then that support breaks by a certain percentage. In this case, the support broke by about, let's see, 7%. Did I do that right? Yeah, about, that math is wrong. Do that one more time. So we fell, oh my goodness, yeah, that's right. We fell from 25.5 through that main support of 25 down to about 18, 19. So shaving $6. Yeah, about a 25% fall through support. So great bounce back, and yet we've done nothing to fix the trend because we could not maintain 25.5. So wow, that was not necessarily what I was expecting to see. But wow, that is a significant move. And again, off about 4% today. So you're going to need to see a line in the sand on Intel pretty darn quickly here from the bulls. Otherwise, things could turn ugly again. And it might be, the kind of thing where you revisit that $19 level down below. Unfortunately, that is a possibility. Boy, lots of great comments in here. Thanks, everybody. Let's see. We are just about at time. So I just want to look through and make sure I've got any additional questions I want to address. Yeah, some of you, see that. Yep. Yeah, that so-called carry trade that we saw in the SOX and in the Russell, the SOX in particular, when we go back to July, was when things really started to break down here, was pretty significant for us. And again, there are potential carry trade conversations we'll need to be worried about in January, but that doesn't mean there's not going to be opportunity for the remainder of the year. Certainly feels as though we've been a lot of discussion around the potential for continuation of the overall broad market moves. But we'll continue to discuss this, as you know, in Trader Talk, at least Monday through Wednesday and Friday in our ETF class. So I'm hopeful that you all are able to continue joining me as we continue the conversation, because it's not going to be boring as we get towards the end of the year here. I can assure you all of that. So thank you so much for being here today. I appreciate your comments. I'd love to hear from you if you have the opportunity to complete that survey. Like I said, it only takes about 60 to 90 seconds, but your input does help me out quite a bit. And I will be happy to bring your ideas to the table where I'm able to do so. So take that time. Follow Connie and me on X at Connie Hill CS and at Kevin Horner CS. Appreciate the follow there. And if you have questions and you're catching this one in the archives, don't forget you can use the details down below to drop a comment or question for me as well. Those come to me, and I'll be happy to reply to you here in the YouTube page. So as always, love having you guys. Thanks for being here. Happy Tuesday to everybody. I look forward to seeing you all again real soon.